welcome back. You're watching The Money Show on ET now. We just had a very interesting discussion with Upstocks, a digital investment platform, which I'm sure a lot of you guys have been using to indulge in some day trades. Though he does give his words of caution, he also gives his words of advice to all traders. Read and be informed. Also ensure that you implement strict stop losses. Okay, well, let's move on now and talk about a little more long term, and that's mutual funds. Union Mutual Fund unit holders, listen up, because this is your chance to meet the fund manager. I have the pleasure of introducing Mr. Vinay Paharia, the CIO of Equity with Union AMC. Vinay, really appreciate you giving us your time today on The Money Show. Thanks so much for joining us on the show. You handle quite a few funds. You manage quite a few funds, right from the multi-cap fund to the mid-cap fund, the large and mid-cap fund, the value discovery fund, which, by the way, has done very well as well. In the last 3-4 months, a nice bounce is what we've been witnessing, in this fund. But I want to talk to you more holistically about investing in mutual funds, and I'm sure a lot of your unit holders as well may have asked you this question, that okay, my NAV has fallen quite a bit, even though I've been doing long-term SIPs. The NAV currently is very far from the cost at which I bought these mutual funds. What's the advice you are giving them, all of these unit holders who right now are looking at NAVs and really fretting at the values?
Inviting me to the show. So that's a good question, simply because investors need to look at mutual funds as a long-term investing vehicle, and especially equities. So when you are comparing equity returns, ideally the way you should compare is not compare from peak to trough, especially when the markets are very down. You should not compare your returns from the peak to that down point. So for example, a lot of investors had been talking to us about equity returns being negative when they were looking at March data. If you look at equities over a longer period of time with a rolling 5-year or 10-year returns, you would notice that equity has, as an asset class, has been outperforming most of the other asset classes. So yes, the way to look at equity is compare it over a longer period of time, preferably looking at rolling 10-year returns rather than point-to-point returns.
And any which ways, equity mutual funds is a tool for people to, put their savings for the long term. So let's say maybe you want to keep it away for your retirement or any long-term goal. And if it is a long-term goal, then maybe even if there is a fall in the NAV right now, it shouldn't really perturb you, because your intention is to park it and keep it in the equity mutual funds. So Vinay, then it would be correct to say that right now, just simply don't touch, the mutual funds. Don't panic right now. Just stay as you are.
So one of the ways, we have been talking to investors about the way to look at mutual funds is look at it like you look at your real estate. So when you buy a house or a property, you do not keep looking at your neighbor's property values whenever there is a transaction and panic and go out to sell, or panic and go out to buy whenever there is a transaction which takes place at a very high or low price. Simply because the way you look at your real estate is that I'm buying it for a long period of time. I'm not perturbed about any price fluctuation. Similarly, if you have a similar approach of viewing equity, I'm sure investors will make a complete, will be able to take full benefit of this asset class, such as the liquidity, such as the superior returns, etc. And of course, not to mention the superior taxation advantages.
Oh yeah, can't miss out on that one for sure. All right. Vinay, we have seen the market rally. The Nifty has come up quite a bit, and a lot of our viewers as well do send us this question on the Money Show, that okay, now that the market has rallied, things are not looking good, and should I take some money off the table? Should I sort of maybe consider redeeming some equity mutual funds? Maybe not from that perspective, Vinay, but do you think this market rally is a good time to, consider rejigging or rebalancing your portfolio? Maybe consider taking some money off the table, maybe putting it, in things like a debt fund maybe, or a bank fixed deposit. And I'm talking especially for those people who may be approaching retirement, let's say, or not just retirement, any of their financial goals for which they, had kept their money in equity MFs.
So, Mubina, this is a very important decision which would be taken by any such investor, irrespective of their stage in life. And that is why we always recommend investors to take advice of a professional financial advisor to decide on asset allocation matters, to decide on which type of assets they should invest in. So I would advise such investors to first take advice of a professional advisor. And once they have been given an advice, it's important to stick to that investment advice through thick and thin. So, for example, when the markets fall down substantially, you should not change your equity allocation and vice versa. So that is the advice. Don't change any asset allocation advice given by your investment advisor. And if you don't have one, start seeking a professional investment advice.
All right, okay. Now, Vinay, we've noticed quite an interesting trend in the last 3-4 months. The value discovery fund, value funds basically have seen a lot of interest, and they've seen a good amount of outperformance as well. Let's say if you compare it with the Nifty 50, value funds essentially, as the name suggests, they look for value in the markets and pick up stocks in where value is being witnessed. Your own value fund as well has delivered almost 18 to 19% as per Morningstar in the last 3 months. So if I have to look at within mutual fund categories, multi-cap, large cap, mid-cap, small cap, and then of course the value funds, how would you advise, mutual fund investors essentially look at perhaps increasing or decreasing their SIPs?
So when we were talking about value discovery funds investment proposition, the key investment proposition to investors was, today, most of the investors are completely invested in growth-oriented stocks or schemes. So if you look at what is doing well, till about few months back, it was always growth-oriented companies. So the entire investment was completely focused on the growth side. So while investors were diversified on mid-cap, large cap, small caps, they were not at all diversified by factors, which means they were completely invested only in growth style of investing. And that was the key investment proposition of the value discovery fund, that invest some portion of your equity investments in value discovery so as to diversify away the factor risk. This is a key factor risk which should be diversified, and that's the investment proposition. And clearly that has played out over the last 3 months.
All right, understood. So what, what's in sight for the value fund now? I mean, I just want to understand what kind of investors should look at the value fund. I know one thing's for sure, that they should all be long-term investors, but if you could also explain the risk profile, of the investor who could consider investing in value fund.
Oh, sure. So one type of investor who should definitely not look at this kind of a fund is an investor who is looking at short-term returns. So what we have observed is, normally the returns in this type of funds come in bursts. So there will be a short period of time when the funds will deliver a very sharp return outperformance with the benchmark, and there will be periods of lull. You will observe that it will keep on doing a little worse off than the general benchmark. And once again, there will be a step increase in the overall returns. So there will be returns in bursts. So definitely this fund is not for short-term investors. And yes, the type of investors who can invest in this fund are those who are long-term investors and medium-term investors, investors who understand equity and who already have some allocation to equity. Of course, this is not a fund where you can put 100% of your equity allocation as well. It is a great tool for diversification, but definitely you should not have 100% of your exposures as well to this kind of a category. So it's a great tool for diversification, I would say.
All right. Okay. Just before we wrap it up, Vinay, we have, there's this fear that has sort of emerged that, we have some very reputed companies, AAA rated companies that have seen defaults, and that in turn has hurt the NAVs of a lot of mutual funds. So I want to understand Union MF's screening or stock filtering process to ensure that only good quality names enter the mutual fund. How would you assuage this fear that may have cropped up in unit holders' mind?
So the reason why we have seen defaults in some of the AAA rated companies is because some of the rating agencies may not have revised their ratings in some of these companies, because on an ongoing basis, the businesses and the outlook on these companies was clearly deteriorating. What we see is that the equity market is normally much ahead of the curve than the fixed income markets in identifying credit risk. So in that sense, the way we on the equity side we tend to look at risk is we look at companies which have a great track record, which have management quality based on some of the objective factors which we want to look at, and we want to look at the kind of businesses which are much more stable, have delivered a reasonably good returns on equity over a longer period of time, and of course have very limited debt. So one thing which is very, very crucial in terms of the way we approach companies is we are ready to take income statement risk, but we do not take any balance sheet risk, which means we normally avoid leveraged companies. So that is the mantra of investing on the equity side, which helps us sidestep some of these potential accidents which may be waiting to occur.
Understood. Okay. Well, all right. I'm sure all of your unit holders will be happy to hear from you. Thank you so much, Vinay, for joining us today on The Money Show.
My pleasure.
Well,
thank you.
On that note, we will slip into a very short break. But when we return, we have our Spend with TMS segment lined up. And that's going to give you some clues as to how you can survive the work from home with some of the best gadgets in tow with you.